I have a pretty sizable managed financial account that somebody else, does all my buys and sells and all that stuff.
Right.
And it's been doing well. My question is, I'm getting new money in, and I'm trying to figure out where to put it. Because if I put it in that same person's management, then that new money is incurring the same risk as my big portfolio that's doing well. And so I'm trying to figure out, well, what do I do with this new money?
So, Lisa, are you still working?
My husband's working. I'm taking care of my family.
Okay.
And I have a company, but I've had to put it on pause because of family situations.
So, and how far are both of you away from retirement?
So my husband's about a year from retirement.
Okay. Do you think you're going to need this money to supplement your income, or would you like to use it to supplement your income when he retires?
Yeah, so that's a possibility, because I'm starting to think about layers of income.
Yes,
that there's
that's a good thing.
certain layers that are coming from the portfolio, from dividends, et cetera.
Sure.
And periodically, certain investments cash out where they close for example, some of it's in real estate, so maybe they might sell a piece of property and then they'll give me my capital back. But what I'm really confused about is when I get new money, well, what do I do with it?
So I think you ought to. I think it'd be great to open an account at a different brokerage, at a Fidelity or Schwab or TD Ameritrade, one of those things that I always mention. And just open an investment account, not any kind of qualified account. And I think you should look seriously at some of the income. So everything in your existing portfolio ought to be. I would tell you not to reinvest anything. So if dividends are being reinvested, I probably wouldn't. I would either allow them to accumulate in your money market account there or get paid out to you, but I wouldn't be reinvesting. I would be looking towards an income type, some income type investments in this new portfolio that you might establish. I have an income portfolio on my website that is designed for just getting income. I noticed this morning as I put 10 or 11 new companies on the buy list that the majority of them were all paying dividend. I would say 6 or 7 of them were paying dividends. And that's a good thing. And I also noticed that there are a couple others that I'm about to put on that have increased their dividend, and that's very good news. So I think we're starting to see a little bit more stability come in to those dividend-paying stocks, and I think that's what you ought to be focused on. I don't know. It's hard for me to say what you should be in because we don't want to build anything. You don't want to build anything based on an account. So I always try to encourage people to look at what they have as one pot of money. So it doesn't matter. Don't look at something as that's that account and this is this account, but it's all one pot of money. And what I mean by that is, and why I want you to do that, is because I don't want you to get overly aggressive or overly conservative or overly diversified or, worst thing, not diversified enough. So you have to be careful that you're not creating duplication in what you already have. And that would include duplication in sectors. Because, for instance, if the markets go down in industrials and technologies, your industrials and technology stocks are going to drop. Well, you don't want to have your group of industrial and technology stocks in that portfolio and have it again in this portfolio and miss out on having energy and utilities that maybe aren't dropping. So that's what I mean by diversification. So not knowing what you have where you are, I can't give you any advice about where you should be with the new money because I wouldn't want to, it's not a standalone kind of thing. It needs to be considered as a part of different pots of, as one pot of money, different accounts. So
what I hear you saying is potentially invest with a different brokerage house and also pay attention to what sectors of the economy the money has been put in.
Right. You have to do that. You have to diversify. And that's exactly what I'm saying. So you've got to make sure that you're not over diversifying or under diversifying. You want to make sure that you're keeping, it doesn't help to separate your money at all if you're doing the same thing. The other thing I want you to think about is if you were following one of our strategies and our strategy said you should have 7% of your money in energy, it's got to be 7% of your total pot. Not 7% of the account, 7% of everything. And that's where we make mistakes and get kind of messed up. So that's why I want you to think of it as one pot of money and then diversify it accordingly. Hey, remember to click the subscribe button right here on the screen. And don't forget to hit the notification bell so you'll be notified when new content is added. And more importantly than anything, you don't want to miss all 3 live hours of Financial Issues every day from 9 to noon. And you can watch it on FISM.tv. That's FISM.tv.